we are kicking things off with massive news shaking the semiconductor world. Leading contract chip manufacturer Taiwan Semiconductor Manufacturing, or TSMC, has dramatically raised its estimate for 2030 semiconductor spending, projecting the market to hit a staggering $1.5 trillion, more than doubling the spending seen in 2025. We dive into why TSMC's advanced manufacturing and packaging capabilities make it the undisputed long-term winner in this massive growth cycle.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we look at the evolving landscape of AI power solutions. Alpha and Omega Semiconductor, or AOSL, has seen a significant 10.1% drop following their third-quarter loss, but the focus is shifting to their push into higher-value power products, specifically designed for AI and computing. We explore whether their smart clamp launch can finally turn the tide on their margin pressures. Now, let's talk about physical AI and sensor technology. Indie Semiconductor has just announced a €40 million move to acquire the CMOS image sensor group from AM's OSRAM AG. This acquisition significantly bolsters Indie's portfolio in critical areas like automotive ADAS and physical AI applications, positioning them for massive growth in the sensor market. And finally, we wrap up with exciting developments in global tech manufacturing. Cyient has officially launched a commercial GaN device portfolio in India, leveraging Navitas technology, signaling a major expansion of advanced component manufacturing in the region. Don't miss any of these critical updates. Stay tuned right here. The global semiconductor market is on a trajectory for massive expansion, with leading contract chip manufacturer Taiwan Semiconductor Manufacturing, TSMC, forecasting the market could reach $1.5 trillion by 2030, effectively doubling the spending projected for 2025. This significant growth is being fueled by advanced manufacturing capabilities and crucial chip packaging technologies, which are becoming increasingly vital for the development of next-generation AI servers. U.S. hyperscalers are aggressively investing in data center infrastructure, planning to spend over $700 billion, with multiple major players increasing capital expenditure budgets, signaling sustained, high-level demand. TSMC is uniquely positioned to capitalize on this demand, boasting market-leading manufacturing processes and advanced packaging capabilities necessary for efficient AI hardware, holding more capacity for the world's most advanced chips than any other single entity. Management at TSMC has updated its guidance, projecting full-year revenue growth to exceed 30%, despite facing short-term headwinds from rapid price increases in memory chips. However, the company maintains a strong long-term outlook, expecting 25% annualized revenue growth between 2024 and 2029. TSMC anticipates that 55% of its 2030 spending will be directed toward high-performance chips, a segment projected to surpass the entire current semiconductor market size. The company's strategy centers on scaling its next-generation N2 process and expanding advanced packaging to integrate more logic chips with high-bandwidth memory, directly addressing key bottlenecks in AI training and inference by reducing data transfer latency. TSMC benefits from a virtuous cycle, where its leading position drives further investment in research and development, securing its position as the world's largest contract chip manufacturer. While competitors like Intel are seeing demand for chiplet technology, TSMC's capacity constraints are expected to increase demand for these solutions. Despite strong performance, TSMC stock is currently viewed as undervalued, trading at less than 27 times forward earnings expectations, contrasting sharply with competitors like Intel, which trade at over 100 times earnings expectations with less certainty. Analysts project earnings per share for TSMC to more than double between 2025 and 2028, positioning it as a compelling long-term investment opportunity amidst the booming chip sector. Alpha and Omega Semiconductor, AOSL, shares dropped 10.1% following a third-quarter loss, despite ongoing strategic efforts to capitalize on the artificial intelligence boom. The market's current outlook hinges on the company's ability to translate its push into higher-value power products for AI and computing into tangible profitability. While recent sales remained steady, the net losses widened, leaving execution in AI-focused power solutions as the primary near-term catalyst. The persistent risks cited by analysts include low margins and cyclical end markets, potentially delaying a return to consistent profitability. A key development mentioned is the launch of the Smart Clamp DrMOS, a product specifically aimed at AI servers, data centers, and high-end graphics applications. If this product successfully gains market traction, it could strengthen the argument that increased content complexity in advanced computing can gradually improve AOSL's product mix, even amidst current net losses and modest revenue guidance. Looking toward the future, AOSL projects reaching $864.4 million in revenue and $146.7 million in earnings by 2029, necessitating an 8.1% yearly revenue growth and an earnings increase of $253 million from the current $106.3 million. However, analyst projections vary significantly. Some optimistic forecasts anticipate $869 million in revenue and an earnings swing to approximately $8 million by 2029, presenting a much brighter scenario than the current consensus. This divergence highlights differing interpretations of the company's trajectory, factoring in concerns over rising regulatory and environmental costs. Investors are advised to conduct thorough due diligence, examining fundamental data and various future scenarios, as the stock's current valuation is being debated. AOSL designs, develops, and supplies power semiconductor products across various sectors globally, including computing, consumer electronics, and industrial applications. Indie Semiconductor has announced a definitive agreement to acquire the CMOS image sensor product line from AMS OSRAM AG for €40 million. This strategic move significantly augments Indie's advanced driver assistance systems, ADAS, portfolio, and bolsters its expansion into the physical artificial intelligence, AI market. The acquired product line comprises intelligent, high-performance CMOS image sensors designed for industrial, automation, and physical AI applications. This portfolio of products, intellectual property, and designs directly complements Indie's existing automotive ADAS sensing solutions, enhancing the company's multimodal sensing capabilities across radar, vision, LiDAR, and ultrasonic technologies. Mark Tyndall, Executive Vice President of Corporate Development and Investor Relations at Indie, stated that integrating AMS, CMOS imagers with Indie's sensor fusion hardware and perception software will enable the delivery of unparalleled sensing systems for next-generation autonomous machines, including humanoid robots, collaborative robots, cobots, and autonomous mobile robots, AMRs. He added that this acquisition extends Indie's leadership in sensor fusion technology and expands its GaN SLED light source solutions, positioning the company to capture a larger share of the rapidly emerging physical AI market. Image sensors are critical components in high-performance visual platforms such as humanoids and industrial automation. The market for image sensors is projected to grow to over $40 billion by 2030, fueled by increasing autonomy requirements, safety regulations, and the adoption of AI-based vision ADAS systems that demand multimodal sensing, low latency, and high resolution. The transaction structure involves a cash payment of €35 million at closing, supplemented by a €5 million vendor debt note from AMS OSRAM. The deal is subject to customary closing conditions, including regulatory approvals, and is anticipated to close in the third quarter of 2026, expected to be immediately accretive to earnings. Indie Semiconductor, headquartered in Aliso Viejo, CA, focuses on developing innovative, high-performance, and energy-efficient mixed-signal system-on-chips, so CS, and perception software for ADAS and industrial applications, including humanoid robotics and quantum technology. The company is an approved vendor to Tier 1 partners, and its solutions are utilized by major automotive OEMs globally. Cient has officially launched a commercial portfolio of gallium nitride, GaN, devices in India, marking a significant step in leveraging Navida's advanced technology within the domestic market. This strategic move underscores Cient's commitment to expanding its high-performance semiconductor offerings in the region. The introduction of these GaN devices is anticipated to cater to growing demands for more efficient and powerful electronic solutions across various industries in India. Industry analysts suggest that the integration of Navida's proprietary technology into Cient's commercial product line positions the company strongly to compete in the rapidly evolving semiconductor landscape. The launch is expected to drive innovation and potentially accelerate the adoption of next-generation power and signal processing technologies within the Indian technology sector.